Welcome back to another weekend deep dive. My name is Justin, and this weekend we're going to try to figure out what stocks to buy for the next week, for the next month, and into the end of the year. The market hit another record high, the 51st in 2021. However, a lot of stocks are basically going nowhere. So what we want to try to figure out is, now that we got the all clear from Jerome Powell, basically a status quo meeting from the FOMC at Jackson Hole, we want to know, how can we make money in the next 30 days, and notably going into the end of the year? And I also want to talk about another chance to win $1,000. We wrapped up a contest, I think about 2 weeks ago while I was away on holiday, for a chance to win $1,000 for preparing the dip plan and basically trying to get prepared to make money. We didn't have great participation on that one, so we're doing a follow-up meeting. A follow-up contest, and we will talk more about that later in the video. So again, stay tuned till the end of the video if you want to know how you have a chance to win $1,000. The reason why we're doing that $1,000 contest is because I think a lot of people genuinely just don't know how to prepare a plan, how to make money. So why not watch what other people are doing? We have hundreds of people in our group. And again, if you want to join us for a 7-day free trial, you can click on the link at the top, blazecapital.com. All right, let's jump straight in here. So my weekly notes here pretty much highlight what I want to focus on for this video. So the first thing is that Tina, there is no alternative. So if there's no alternative, where do we put our money? That's the question, and we're going to try to answer that in this video. And again, if you're watching the stream at any point, I would really appreciate your thumbs up. Click it, ravish it, make it turn blue. Do whatever it takes, please and thank you. Again, our base case is still the same as what we went through last weekend. 2 weekends ago, because I was away on holiday last week. We're likely going to drift higher, like the previous 50 DMA backtests as we had on the SPX 500 USD chart. We're going to review that in a moment here. The status quo from Jerome Powell and Jackson Hole. We have this September meeting coming up. But as of right now, again, status quo. We hit a fresh record high, as I pointed out. We still have a September monthly expiry for 440, 450 call spread, and as of Friday, there was big activity at 460 and 462 volume. That was made a mistake there. All right, even Justin's human, he still makes mistakes. Goldman Sachs has a target of 4,700 going into the end of the year and 4,900 going into the end of 2022. So what does that mean? Higher. So again, we're going higher. I don't know why people keep being surprised. Everyone's looking for a bear catalyst, and again, I just don't know what it's going to be. The dips are getting more and more shallow, so why would we assume it's any different this time? And again, we're going to circle back and talk about this chance to win $1,000 a little bit later. We're basically going to pay you to prepare to make money, right? How weird is that? That's a really weird prospect on the internet. And again, we have that 7-day free trial if you're not currently a member and you want to join us to participate. All right, so the number one thing I want to highlight here, I actually typed it up, so it's very easy for us to go through. It's actually these ones right here. So what we have to keep in mind is that these individual like ETFs or indexes, right, the actual index, we note that there are a lot of stocks inside of them. So what's really curious for me is which one has the most stocks and which one is returning the most amount of money. As we can note, NYSE has 2,800 stocks. The Russell 2000 has 2,000 stocks. The RSP, which is equal weight S&P 500, has 500 stocks. The SPY, or the Spider Managed ETF, has 500 stocks. And then NDX, or the NASDAQ 100, has 100 stocks. So as we look through here, the really interesting thing for me is that IWM is the laggard. So IWM is the worst performing one so far year to date. 15.5% is nothing to complain about. But again, if our goal is to make money, we don't probably want to buy IWM. Why? Well, again, objects in motion tend to stay in motion, and this stock is stuck. It's going nowhere since the beginning of the year. Secondly, we want to look at NYSE, which again encompasses roughly 3,000 stocks. We can see that it's up by 16%, edging out IWM, but not really outperforming here. What we can note is that the NDX is actually up by 20%. The SPY is up by 20.5%. However, the number one performing sector right now is actually equal weight S&P 500. That's pretty interesting, right? I find that pretty interesting. So, right, the theme is clear to me. And what we're going to try to figure out is exactly how we can do this. So we're going to jump in a few moments here. And one thing I just want to touch on myself is that I think a lot of people are generally looking to raise a lot of cash and sit on the sidelines and not really trade. So just from my own personal perspective, I just want to share something here. I'm not going to show you what stocks drove these returns, but I started a small account challenge at the beginning of July. I was away on holidays for 2 weeks. I did not manage it for 2 weeks. However, month to date, I was able to return about 22.5% of my account. You want to see what stocks drove this performance? Again, click on the free link to join us. And I didn't really do much. I did very little. I'm letting my money work for me. So spending time in the market is really working out. And for me personally, again, making 22%, that is fantastic. It's definitely not what I'm expecting to make every month, but right, cannot complain. So what I do probably better than anyone else is that I prepare. I do an incredible amount of homework. So I plan the work and then I work the plan. So again, if you want to know what my plan is for the next week, next month, and into the end of the year, I have all that stuff laid out inside of our group. And we have hundreds of traders which are going to hopefully also lay out their plans. So again, if you haven't already, I would really appreciate a thumbs up. Let's jump straight in here. So first thing I actually want to look at it is we know the performance of these individual ETFs here. We're going to circle back and talk about that a little bit later here. So we looked at the S&P 500 summary. We'll go through that in a moment. We're going to have a look at the heat map, the options chain, the Bloomberg market news. We're going to look at the economic calendar, ETF review, market moving news, and finish off with some charting. I'm aiming for a shorter video this week. So where I actually want to start is going to be with the charts. Let's jump in here. So looking at the SPX 500 USD or the S&P 500 futures, the case for me is very clear. Every time we hit the blue line is the 50-day moving average. So bounce, 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 bounce. Every time we bounce, we go back up. So bounce, go flat, bounce, go up, bounce, go flat, bounce, maybe go up. So it looks like every second time we go up or we go nowhere. So nowhere, nowhere, up and up. Why would we assume this is any different? Sharp reversal, new all-time high, new all-time high. So I think like we're somewhere around right here where we're pushing to a new all-time high and we can keep squeezing higher as long as those daily lows hold. That's probably the most important thing for me. Uptrend holds, higher highs. There we go. It came back down for a retest of the previous tops as well. So what I would be watching for would be something similar to this, where we're going to push up somewhere, back test into here, and that's the base case. Until we fall back below this previous top, in my opinion, we're likely going to push higher. And even if we lose this area, I am watching for this pocket of consolidation right here. This also happens to correspond with roughly mid-September, which is going to be right around monthly OPEX, and also when the House is set to vote on the reconciliation bill. So with $3.5 trillion on deck to get voted on, in a liquidity-driven rally with fresh liquidity, we would have to assume this could be a bull catalyst. All right, that's the easiest thing for us to look at here. So we're not really going to be going anywhere. Second thing I want to look at here is just going to be the percent declines of these last couple of dips here. So we got about 3.7%, and then here we got about 2.7%. Okay, so if we were going to dip down about 1.7%, we would take it back down here to about support on the green line. If we were going to match, we're looking at about roughly 2.8%, the same percent decline as the last one here. All that means is that we're not looking for huge moves lower or higher. We're looking for sideways to up. That is the easiest way to explain what we're looking for here. Next thing to look at is going to be the chart that we actually, ironically, when I think we launched this channel is when we started this. So is the stock market crash over? Well, it kind of looks like it. Why? Well, the dominant pattern that we had going back to having confidence we were going to be pushing higher was this inverse head and shoulders on the daily chart. Green means support, and the yellow lines just signify a head with a neckline here. Bouncing off the neckline, pushing to a new all-time high is quite bullish. What I would also note is that I drew this V or cup and handle inside of this pattern here on the last video. What you're going to notice is that we're pretty much just resuming back up higher. So we're pretty much just doing that. We took a little bit of a blip lower, 3-day dump, right back up. So we have to assume that as long as the uptrend holds, we're likely going to keep pushing higher. From a chart perspective, that is the most important thing right now. What I want to jump to now is actually going to be this. So I touched on it briefly earlier, but U.S. stocks closed at or near their high on Wednesday. And again, this was before we heard from Jerome Powell at Jackson Hole. So what I want to point out here is that the S&P marked its 51st record high this year, matching the greatest number of closing records to this point in a calendar year since 1995. Remember, the bubble came in 2000, so 1995, 1996, 1997, 1998, 1999. Yeah, then we blew up. Then we had the stock market crash. The big bubble blew up. So again, this is telling us that potentially we're not done. Maybe there's a lot more upside for the market to give us. What I want to point out next is that Goldman Sachs actually gave us an outline for how they think the Fed is going to be tapering and then when they're going to raise rates. I'm going to focus more on what Goldman Sachs said than what Jerome Powell said. But for here, the important thing is that if we are somewhere between 1995 and call it like 1997, what we want to know is when is the Fed going to start removing accommodation? First of all, removing the tapering, meaning that they're going to stop buying bonds. When they stop doing that, they're going to go back down to zero, meaning they're not doing any purchasing, and then they're going to raise rates. They're not going to raise rates until after the tapering is done. So the timeline we're going to be provided here is relatively important. Goldman Sachs raises odds on U.S. Fed taper announcement in November. November, not September, not October. When? November. So what does that mean? Likely higher for longer. Whether you believe it or not, that is likely what we're going to do. I want to jump down here to one section. A November announcement coupled with a $15 billion per meeting pace would mean the FOMC would make their final taper at its September 2022 meeting. Goldman Sachs noted in a note dated August 18th, referring to the FOMC's committee. This was before we heard from Jerome Powell at the Jackson Hole meeting, their annual symposium. They also raised their annual target to 4,700 before this as well. What does that mean? They don't really need to hear from Jerome to have confidence in what they think their targets are going to be. And again, looking here, we get September 2022. That is 1 year from today. So what we talked about last weekend was the stock market crash and how I believed it was over. I still believe it's over. And the warning signs I would be looking for to confirm or deny that we are on track for that. So if we don't hear anything different, again, if they start tapering at a modest rate, and again, as of right now, we're expecting that sometime in November and to finish off into 2022. So into 2023 is likely when we're going to have liftoff of those interest rates being risen. So between now and 2023, that's about a year and a half. Do you want to make money in the next year and a half? Do you want to sit on the sidelines? That's up to you. And again, every month there are opportunities out there to make money. All right, so that's the easy thing to look at here. And then after this happened, we're also going to look at what Jerome Powell had to say. Why Jerome Powell's business as usual Jackson Hole speech was the best possible outcome. The best possible outcome. There you go. Why? He's been rock solid. He has been steady AF. And I don't know why people keep wanting to fight the Fed. I have another image here I want to show really fast. And this right here just shows us that the people who actually vote to create the monetary policy are the people with a red. That means that we got Jerome Powell, Brainerd, Williams, Evans, Clarida, Dowley, Bostic, Barkin, and Waller. Waller is bearish. However, the people who were very outspoken regarding we got to start tapering, blah, 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 blah. Kaplan, Bullard, right? George, they don't vote. So what does it mean? Their opinions are just that. They are opinions. They do not affect policy, at least for this year. I believe Bullard's going to be a voting member into 2022, but let's look at the board here. Who's the guy everyone focuses on? It's Jerome, right? This guy right over here, right? Jerome, Sugar Daddy Papa Powell. What has he been saying? We're not there yet. What did he say again on Friday? We're not there yet. So I don't know why everyone wants to keep betting against him. So when we have four members over here who vote, who say we're not there yet, we got four over here who were saying announce this fall, and then we got one who's saying tapering. Clarida came out and pretty much said that we have the inflation mandate in mind, but our full employment is not quite there. We want to see a few more reports. What does that mean? A few more months. Every month is when we get a new payroll Friday. And this Friday, we're going to be getting that. We should be getting payroll Friday coming up this week, September 3rd. So that is going to be a very important data point for us going into Friday. However, we got four people who were saying we're not there yet, four who were saying that announce this fall, and then one says start tapering. Well, what was the reaction? We basically heard from Powell, right? We're not there yet. We're doing it sometime this fall. So he's towing the line. He's being professional. And that is why what Jerome Powell said was the best possible outcome. I just want to jump down here to Right, Jerome Powell's annual Jackson Hole was uneventful, but that was not a bad thing. Powell reiterated the Fed could start tapering its asset purchases this year at rates, and rates aren't changing soon. Basically, exactly what I just reviewed. Stocks hit record highs during the speech as investors shrugged off fears of an early pullback in Fed support. You want to make money? Again, everything is laid out here, so we pretty much got the all clear. Jackson Hole is an annual symposium. They're outlined for the next year. There you go. In about 15 minutes, that is basically what you need to know for this week ahead. We're probably going to be melting higher. So we've now gone through everything else. There is no alternative. So if there's no alternative, we probably want to be buying stocks, right? Why? Because that's the trend. The trend is your friend. Moving forward here, let's go to the heat map. So, but I think what I actually want to do as well is actually flip over to my notes in a second here. So I'll flip over to my notes in a second, but first I want to look at the heat map. So if you've not been participating in this market, what you've missed out on are tremendous gains. Last thing I want to point out here is actually, I didn't have this up, but it's a love letter. A love letter to Sugar Daddy Papa Powell, right? Let's have a look and see what this did and what exactly it means. So a love letter to the Fed from the adoring stock market. This was put out as a joke almost exactly a year ago, August 21st of 2020. So again, the stock market loves this guy. They love Jerome Powell. Why? He's been steady. He's been accommodative. He's talked about he's talked about transitory, and the market loves that. Why? Well, as we look here in the last 12 months, or basically going back to that August 2020 timeline, 1 year and 1 week ago, what do we note? It's basically an everything rally. Take your pick, throw a dart. Every sector's up. Select names are not quite green, but the broad-based trend here is that stocks are going higher. There's no surprise here. So if Jerome Powell a year ago basically told us that we're going higher, I'm going to be accommodative, we're going to print more, blah, blah, blah. This is what happened. Everything went up. Some stocks, some big stocks, almost doubling, right? Google's almost up 100%. So we look at what happened in the last 12 months. We look at what's happened year to date. Oh, everything's kind of green too. Same pockets are green, same pockets are less green. Looking at the last 6 months, we note that, now there's some divergence happening where there's some pockets that are getting much greener and some pockets are getting less green. Well, we also note that on pretty much every time frame, the $1 trillion club collectively are outperforming almost everything else. Looking at the last 3 months now, we start to notice there's some divergence here. Look. Right? $1 trillion club really outperforming, which is what I predicted. And now looking over here, we see that there's a lot more pockets of red. They're not deep red. They're a little bit red. But again, we're seeing that rotation where we're seeing some names getting less love and other names falling back into favor. Looking at the last 1 month, we notice that trend also accelerating here where, again, financials are now actually picking up. So we're seeing rotation back into other names, right? It's getting a little bit complicated. And that's why it's important for us to know what stocks to buy. And then finally, looking at the last 1 week, we note that again, the $1 trillion club are coming back into favor here with banks. So the trend is clear to me. And what I want to go through next here is going to be my analysis of the individual sectors. So I'm going to pull up my actual notes here. And again, if you're looking for these, you can find them on Slack. You can find them under the SPX channel. So what we're going to be looking at here, I'm just going to go up to, I'm going to jump down to one section here before I go back and do the options, clues, and everything else. I just want to show what's happening here for the NYSE versus RSP versus SPY, and then versus the NDX. So what we're noticing here is that the New York Stock Exchange, which includes 2,800 stocks, is pretty much going nowhere. If you're ever wondering what stock I'm looking at, look over here in the top left-hand corner, and it's going to show you the ticker right here, NYSE Composite Index. It shows the ticker in the top left. So what's it done? Pretty much nothing. Price discovered higher and went nowhere. Looking over here at RSP or equal weight S&P 500, which means each one of these blocks is equal weighted. Right here, this is going to include SPY. So the bigger the block, the heavier the weighting, meaning the more it influences the price of the SPY. So looking here at RSP, again, #1 performer year to date. You might not even know that. Why? Up. So the average S&P 500 stock is actually outperforming, doing well, breaking to a new all-time high. IWM is kind of stuck going sideways here. RSP is not. Looking at SPY though, right, straight up. Maybe not performing as well, but the trend is much more bullish. It's clearly been going straight up, nothing but up. And then finally here, looking at QQQ, which I'm using as a proxy for the tech sector, it's got a bull break, right? Look at that bullish break. Boop! Got a hammer, nice lower wicks, punched a new all-time high. It looks bullish. It looks very bullish, in fact. All right, now I'm going to go through the individual ETFs here. And again, all these are going to be found under the indicators and ETFs thread. So I have some notes here. It says QQQ bull break, 370 apex going into next week. So what that means for me is that we're breaking bullish. There's nothing really that much for us to be looking at here, right? It looks bullish. We broke up. It looks nice. Looking next here at XLF, which is the financial sector, weekly record weekly close with a cup and handle. So what that means is that this looks bullish. It looks like it's ready to lead again. The fact we're seeing QQQ and XLF close at a record high, right around the high of the week, is actually very bullish. It's very bullish. It's not often we see that. Maybe one is going to mean revert. I don't know. They both look strong to me. XLV, which is going to be healthcare, did back off a little bit. It is currently holding its second weekly uptrend and is likely going to act as a pivot going into next week. What I'm pointing out here is just that, again, we got like 3 uptrends here with just the white lines. And this 135 area roughly is really a pivot, meaning that we're either going to pivot and move higher or pivot and move lower. We've now rejected off the upper trend, but we're holding the lower trend here. There's nothing really to look at for XLV. It's really been a really great performer, and it's just backing off a little bit. That's pretty much it. I think we kind of hit peak vaccines. That's kind of what I think. I mentioned it earlier in the stream this week as well. All right, last little sip. Love my coffee in the morning. All right. Looking at the industrials next, or the DIA, we can see that it's bullish and it is melting up. It's bullish and melting up. Nice. Nothing to really look at for the Dow here. So again, just looking at the pattern, we clearly broke bullish. We're trending up. Got a double uptrend. Nice. IWM or the Russell had a big week. It was up 5%. It needs over 230 to confirm a bull break. As of right now, it has been range bound for most of the year, right? It's gone almost nowhere. So big move here into January, and then nothing. It has done nothing. It's gone almost nowhere. XLE is attempting to reclaim the psychological 50 in its first relative low. So what I'm pointing out here is just that, let me actually zoom out just a little bit. We can note here that, again, we're putting in like a big cup. We got a handle. We're bouncing off the 50. We're trying to reclaim this first relative low with the arrow. If we're able to reclaim this relative low, I think we're going to push back up to roughly 53. There's also a 53.57 call spread, which was initiated for October monthly expiry. If you're not sure what that means, just ignore it. The Bitcoin, looking at the Bitcoin, it has a doji weekly with a small range. It is the first pause after fat pushes, right? Huge push off the 50 weekly moving average, and all the way up into here, breaching 50,000, holding 47. It looks bullish to me. Breaking above 51 is likely going to lead to an all-time high test. Gold. Gold is also picking up steam here. So what's very notable about gold is that it's had a massive snapback. Also, after almost hitting I think it hit like a limit down in the futures market 2 weeks ago. Looking here now at gold, we can see that it's attempting a bull break. It has a weekly inverse head and shoulders pattern and has a monthly cup and handle, which is looking a lot better. As a reminder, the monthly candles close out on Tuesday. Looking here again, massive hammer now, right? Whoop, hammer time, baby. Massive cup, handle is intact, high or low held, looks good. Looking on the weekly chart here, we have an inverse head and shoulders, and I thought this right here was actually going to end up being a bull trap, ended up being a bear trap. The bears got trapped. We got an inverse head and shoulders. It's holding. It looks nice. Looks like it wants to go up. NYSE, as we noted before, it is basically going nowhere, right? It's not going anywhere. RSP, on the other hand, is taking a nice leg higher. Looking at SPY, pretty much just drifting up. Looks really, really nice. TNX, or the 10-year Treasury note, we can see that, again, it's got like a big cup. It's back testing the 50 weekly moving average and also back testing the relative high here. If we can bounce, that's great. If not, I think we're going to stay range bound between 12 and 14. Looking at the VIX, another fresh rejection off the downtrend and another red week. So every time it hits this downtrend, it rejects. We got a really massive bear flag, a descending triangle, and I don't see any reason why it's going to slow down here. That's pretty much it for our major key indicators. Next thing we're gonna look at here is gonna be the option clue. So I want to focus in on a couple of things here. Notably, next week for Monday, there is a 450 max pain. We have a 448, 453 call open interest, and we also have a 445 and 444. Or hold on here. Yeah, I thought my notes were incorrect there. 445 and 444 put spread. On Wednesday, it's muted, and into Friday, we have a 450, 455 call spread volume. We have a 451, 452 open interest, and a 450, 448 put volume. So let's just look here and see what that means. All it means here is that there was already open interest. We can see that we get 447 up to 453 with a lot of volume coming in here, right? So volume coming in here. We note on the put side, 450, 449 with open interest going down to 445 and 444. All it means is that we're equally motivated to go up and to go down. I think we're going to open around 450 on Monday. Kind of pin it there, right? Burn the premium. Wednesday, muted. We're going to skip this one. It'll be the first day of the new month, September. Looking out to the 3rd. What I'm noticing here is that, again, we notice we have open interest at about 451, 452, but the volume at 450, 455 is very notable to me. Why? It's the same. It's basically 45K. There's clearly a pattern happening here. The premium on the 450s also implies a break-even cost of roughly 452.50 going into the 3rd. Finally, looking here, we can note that we got, again, tight 3-point range here, right? 450 to 448. That's kind of the range going into Friday. As we look further out, though, I'm noticing some funky activity into September monthly, which is going to be next Friday. We're looking at September 17th, again, September 3rd, the 10th, and then the 17th. We can note here that we got 450 calls, 454 calls, 460, 462 call volume, and 450 to 440 put. 20K was added. All I'm pointing out here is just that we got that 20K. Sorry for the noise in the background if you can hear it, right? I live downtown. I apologize. We can note here that we got the 450, 440 call spread. Again, 20K in volume. It's not really all that important to me because the volume is basically less than half of what we have here on the call side. So it just looks like they're picking up cheap insurance is what it looks like to me. And then looking over to here on the call side, what I'm going to note is that there is big levels here. We're noticing more of a call spread being formed here with 145 calls and open interest at 450 and 85K at 454. And then over here, what I'm really noting is that 460, 462 has a lot of volume here, right? 60,000 and 40,000. That's looking pretty spicy and looking like we might want to push up to 460. Week to date, this insurance was purchased before Jerome Powell spoke at the symposium, Jackson Hole. So, right, burned all this premium, but I think it was just a cost of doing business to protect people who were long going into this. This also looks like a huge hedge to me. We note though those 460, 462s, and these big buying here on Friday, to me, they're all for September 10th, which is going to be next Friday. So 452, right? There's about like $10 million in premium here, right? That's quite a bit. They're also buying in the money puts for October. We're going to ignore that for now. So 452 is the level of interest. We can also see that right here on the September 10th options chain with the volume right here, 58,000. That is huge. October monthly, also interesting. So what I'm noting here is that we got 450 calls that are naked, a 445, 423 volume, and we got 445 minus 7, which equals 438. That is currently roughly the 50-day moving average on the daily chart. 423 is also the low end of the buy pocket that I had for August. So looking here, what's notable is that we have the same open interest here at 450 going into October. That means continuation. However, looking here, I note 445 down to 423. We got roughly 50,000 on either one. I don't know if this is cheap insurance or if they're trying to make a move. It's notable to me though. QQQ is muted on almost everything, so we're going to skip that. Moving forward to here, the notable events and economic things for the week ahead. What we're going to notice this. We got payroll Friday. It really matters. It really matters. Why this is going to matter is because we're looking for a Goldilocks number. If this number comes in very strong, meaning a strong beat, the market's probably going to go lower. It would imply the Fed is going to likely want to raise rates sooner than later. If the number comes in line, that is the Goldilocks number. If it comes in with a miss, that would actually be bullish. A few other events here, including ADP non-farm payroll coming in on Wednesday for a good clue for what we're going to be getting on the Friday. Otherwise, we pretty much went through these articles and already did that. Falling back to our review here, I think I'm probably going to leave it there. The rest of the world does not really matter as much because there is no alternative to U.S. equities. So I think we pretty much wrapped up here and went through all of the most important stuff for this week. And what I want to wrap up here in saying is that we are currently having a contest to win $1,000 for preparing a dip buy plan. What did you learn from the last dip? What can you prepare for better for the next one? And what is your strategy to make money? We have hundreds of people in our group. I'm hoping we're going to get very big participation. I want to give you my money. So if that sounds good to you, as you're smashing the thumbs up, you can consider joining us for a 7-day free trial, which you can find the links in the description and also in the top comment. Finally, I would really appreciate a comment. Let me know what you thought. I've been away for about 2 weeks from doing these public videos. I'm coming back. I am more excited than ever. I think today's video turned out really well, and I want to know from you. What do you guys want from me as we go forward and do these videos? As you've probably noticed, I've been changing the format, trying to tighten it up and have more of a schedule that I can walk through and do my analysis much faster. Finally, I'm going to have my private video out here shortly where I go through and provide my levels for the week, my S&P analysis in more of a deep dive fashion. And if you want to join us for that, again, 7-day free trial is how you can do that. Thank you very much for watching, and I look forward to seeing you next weekend. Thank you very much.